Okay, so in this webinar, we are going to analyze the market. And first of all, I will choose the Bitcoin and Euro USD and one more pair is a Bank Nifty. Okay, so I will focus mainly 3-4 pairs in a deep way, higher time frame to lower time frame and what happening. And after finish this all analysis, I will start quick question answer end of the webinar. Okay. So today I'm going to start from the Bitcoin and first of all, look at the higher time frame picture in a weekly chart that what happening here in a weekly time frame and what we can expect in a upcoming days, weeks, months in a Bitcoin, right? So right now you can see this was a bull market and now market trying to take a correction and then we can expect market continue go higher. But what is the next move and what happening right now? So to predict the next move, you have to understand before this move. Okay. So first of all, look at this one. This was our bullish market and this was our previous major high is here, right? So this one is our break of structure. Okay. So once market create this break of structure and this is our higher time frame break of structure because market taking out this inducement is here. Okay. And after taking out the inducement, our higher high confirm here. Which one is here? Look at this one. Okay. So this is our higher high. And when market break the structure, and this is our weekly chart, right? So in a first attempt, price just with the liquidity. So this is not a break of structure, but market close above it. When market close above it, this become our valid break of structure. And our higher low is a confirm. Okay. So where is our higher low? In this case, you have to identify which is our deepest point between this in this move, right? So this one is our higher low. No, this is our higher low. Why? Because this is our lowest point, right? And a lot of people mark this is our higher low because market broke the structure is here and this is our higher low. This is a not higher low. This is an inducement, right? Okay. And this is a not higher low. Higher low is here only. Okay. Market break the structure, candle close above it. And now again, you have to wait for taking out the inducement to confirm the higher high in a bullish market, right? So what happened here? Market continue go higher and continue going higher high. And then what happened here? Finally, market taken out the inducement. Where is inducement in this case? This one, because this is our valid pullback is here, right? So this one is our inducement. Why? Let me show you exactly what happening here. Because this is our pullback and first pullback was here after break of the structure is here. Okay. First pullback, next pullback, and again continue going higher high, right? So in this case is also a pullback, but this is not a valid pullback as per our plan because the previous candle high and low both are protected. If anything happen between this candle high or low, those don't act like a pullback, right? In this case, this candle high and low is a broken. So it means this become our valid pullback. Market continue go higher and finally market taken out this inducement. So once market taken out the inducement in a bullish market, what happened? Our higher high is a confirm here. This is our highest point is here. And where is our higher low? This was right. And this is our higher high. Okay. Taken out the inducement. After taking out the inducement, probably we are looking for the buy because market was bullish. And you have to buy on the first recent demand zone when we can take entry for the buy. Okay, taking out the inducement and mitigate something here, like here, right? And then market continue go higher because this is our unmitigated shadow is here. And this is just a reference for the buy, but main thing taking out the inducement because this is not a proper order block as per our plan because this is not valid pullback, right? Actually, because the previous candle high and low both are protected. So this is a single leg move is here. Actually, only one pullback is here. So taken out the inducement and market go higher. So we are willing to again buy after break the structure previous high. Which one is here? So this one is our break of structure. Okay. So in this case, what happened here? Market just sweep the liquidity, not close over it. So this is not a break of structure. So again, if market close over it, For example, this candle close over it. So this become our valid break of structure, but market not close over it, just sweep the liquidity. It means this is an indication that market actually grab the liquidity and going to the downside. And okay, so this one again, market taken out the liquidity, not close over it. This is an indication that market looking for the taking out the pullback, at least taking out the first pullback, which one is here. Okay, right. So this is just a first PY, right? And still we are bullish because the previous this become our higher low because market break the structure is here. Okay, this previous inducement, sorry, higher low transfer here to here. Okay, but market not close over it, so we can't use this as a higher low. If market close over it, then we can use, otherwise no. So still we have a this higher low is here, and market this high transfer here to here like this. Let me show you exactly at this point, right? Because this high transfer here to here and actual higher high is here. Okay, and market also taken out the inducement, which one is here. This inducement will be also transfer here to here, like here, this one. Okay, so both higher high and inducement both will be transferred. So actual higher high is here. So in future, if market go higher and break this structure is here, so this become our valid break of structure, and this break of structure will be transferred also here to here, right? So this is a not break of structure right now. This is just liquidity sweep. Okay, so now point is here that where is our next stop in this case. So first one, after taking out the inducement, first POI is here, which is filled. So we can suddenly sell here after taking out the field, the first POI tap and filled. So generally what happened here, market respect this POI is here, okay, and failed. Okay, because market gives reaction is here, that's why we are willing to sell here. But at this point you can see this is a only one candle is here, this is an inside move in this case. So this is generally a single leg move is here, right? So what happened here, like this push downside, taken out the previous candle high, which one is here, and you can sell here, right? So point is here that what we can expect in upcoming days and weeks, months in a Bitcoin. So you have to check where is our unmitigated extreme PY in this case. In a downside, everything is mitigated here. You can see here. This one is also mitigated here. And this is an order flow, which is already mitigated here by this move. And this move is looks an unmitigated zone, which one is here. So probably in upcoming days, weeks, months, years, we can see Bitcoin around $12,000 at this point, because this is our last unmitigated order flow, which one is here. If you refine here, so this is our order block, right? So at least market must be mitigate this one. And once market tap here, then we can see market momentum to go higher, right? So right now price creating, taking out the liquidity and creating internal structure. Take this low is here, taken out, taken out this high, and then short-term possible sell. Again, taken out this one, and probably we are looking for this. Again, break the structure. And once market mitigate this one, first high broken, this is a call change of factor and go higher. So it's take a lot of time actually. You can see here around almost 1 year, maybe. Okay, so it's depend on market momentum, but we are willing to buy here on this demand zone, and this is our potential zone when we can expect market continue to go higher. Okay, and so this is a perspective of the Bitcoin, and you can see this is pattern like flag and base type of pattern, also trend line broken here, you can see. So these are indication. This is a like people are looking for the buy here, but this is a not a actual buy. This is a just liquidity grab and push downside. Okay, and you can see so many times market break this trend line. If you see a Bitcoin chart here, same thing happen here. trend line broken, and this is a candlestick is here. I remember when this move happened here, market collect all money is here, right? And after collect all money, grab all liquidity, taking out the inducement and mitigate something here, right? And continue go higher. And this is exactly happen here. Look at this picture is here again, broken trend line. Okay. After broken trend line, taken out this one, mitigate extreme and go higher. Same thing happening here. Look at this one. This picture as a looks are similar. Market taken out the inducement, taken out this trend line, taken out this high, and probably we are looking for the sell till this one, and then we can see continue go higher in upcoming months, right? Now switch again in a 1 day chart, and then I will show you in a lower time frame also. Okay, so right now, as per the daily time frame structure, what happening here? Look at this one. First of all, you have to mark the structure. This is our previous lower lows is here, and this is our lower high, right? Why? Because market taken out the inducement at this point, which one is here? Okay, so once market taken out the inducement, then our lower low is a confirm here because market was completely bearish. And again, what happened here? Market break the structure is here and candle close over. So when market close below it, then our this lower high is a confirm here because market was bearish as per the daily time frame structure. Again push downside, and then finally market break this one, create new low is here, right? So where is inducement in this case? You can see this become our lower low is here, right? So where is our inducement in this case? First of all, okay, taking out the inducement, first PY is here, and the next one around here. This is extreme, right? Because this is an unmitigated shadow is here. So basically 2 PY is here. First one is here, market gives small reaction, but not able to hold this one, right? And again type here and gives a reaction and finally break this one. So actually we have a 2 PY, first one and second one. And if market close of it, okay, so we can go for the buy for the short term as per the daily time frame structure, because daily time frame is a bearish. If candle close of it, we are looking for the buy after candle close. If not close of it, just with the liquidity, we are still looking for the sell, because when market grab the main liquidity high, measure high and low, which is an indication that market actually looking for the reversal. Same thing happen here. Market sweep this liquidity is here, and we can expect this shadow, this candlestick shadow act like a PY, because this candle grab the liquidity, right? That's why we are using this one as a PY. Okay, so you can switch here in a lower time frame, like you are using daily time frame, then you can use 1 hour chalk and then you can trade here. Okay, and at least target which one is here, because this is our first pullback. Market must be taken out, then market continue go higher. If market actually looking for the if market candle close of it, so this become our valid change of character as per the daily time frame. Okay, so point is here that what happening right now and what we can expect in this case. First of all, look at the previous candlestick is here, and you have to take action here based on the candlestick, because this is a not structure, this is a single leg move is here, right? This is a single leg move here, and this is happening based on the candlestick pattern. Okay, so look at this candlestick. This candle taken out the liquidity, it means this green candle act like a PY, because this is a last buying move before this top, which taken out the liquidity. So probably if market mitigate this one, then definitely we are willing to sell here. Okay, in a lower time frame, switch here and then sell till this one. Okay, now switch here in a 1 hour chart. In a 1 hour time frame, market momentum is a bearish, completely bearish is here. And look at this one. This is an interesting thing is here. This was our unmitigated shadow, which one is here, right? So you have to identify where is our unmitigated PY 1 hour time frame. So this is our unmitigated shadow is here. So price must be mitigate this one, and then we can sell here. So finally market mitigate this one, And at this point, you can sell here, right? Why? Because this is extreme. And in this case, you don't need to wait for the inducement because market already grabbed the higher time frame liquidity, previous daily structure high, right? So in this case, you don't need to wait for inducement before the sell because this entire candle act like a PY, which taken out the liquidity. So price must be mitigate the extreme shadow, order block, or anything. Okay. But if you are willing to sell directly based on the candlestick, okay, so simply actual candlestick is here, okay, which is our candlestick, bearish candlestick, and this is a very larger move is here, right? So if you are willing to sell here, you can also sell here at this point, but you have to put the stop loss just above it for the safer side, right? But for the refinement purpose, this is our entry zone is here. Why? Because this is our unmitigated shadow is here. So price sometime mitigate, sometime not mitigate. It's depend. Okay. So you can sell here and target the previous measure low as per the 15 minute. Sorry. What happening? Okay. So this is our target is here. And again, market mitigated extreme PY, break the structure, taken out the inducement, mitigate again this PY, again sell here. Okay. Again, you have to wait for it. Like, sweep the liquidity is here, break this structure is here. And after break the structure, taken out the liquidity, mitigate this PY, and next PY is here. So you have to wait for it based on the single candle mitigation, based on the single candle order block. So what happened here? Look at this one. This is our unmitigated PY is here, which is mitigated here. So simply you can sell here based on the single previous candle taken out the liquidity, which one is here. Previous candle high taken out and close below it. Put the stop loss just above it and target is here. Okay. And exactly what happened here, again, break the structure here, taken out the inducement, and after taken out this inducement, okay, where is our PY, next PY? This one. Because this is a unmitigated shadow is here, and next PY is here. Okay, because this is internal structure, lower lows, lower high, lower lows, again go higher, break the structure is here, there is no inducement, finally there is inducement, and we can again sell here, right? Again push downside, same thing happen here. If you are willing to sell here, maybe if you are putting the stop loss just of it, and this shadow hit the stop loss, but again push downside, break the structure, taken out the minor inducement, and sell here, break this one, taken out the inducement, and mitigate and push downside, again break the structure measure, taken out this one, and then you can sell on this unmitigated shadow, right? So this is a possible scenario in a Bitcoin as per the 1 hour chart, and this is a deep analysis, higher time frame to lower time frame. And you have to first of all identify the liquidity point, where is the liquidity, and wait for break of structure chalk, and then wait for inducement, taken out the inducement, and then sell. And candlestick formation is a very important when you are playing based on the single candle order block and liquidity shape based on entry module, right? Okay. And right now price in arranging here, and maybe market push downside and then go higher. So you can sell at this point also, because market break this one and this act like a liquidity and then push downside. So this is a next possible scenario is here as per the 1 hour time frame. Okay. And if you are willing to sell based on the pattern stick, I've seen a lot of people trade based on the patterns, but patterns problem is here. And the main thing, market, you can see break the structure in a both side, and people get confused that which side they buy and sell. I'm not trading based on it, but I'm just showing you example that how you can identify. If I'm switch here in a 15-minute time frame, you can see everything is a bearish here. Okay, so everyone have own view for the buy and sell. look at this one. This is our channel pattern is here, right? And people are buying here. They don't know exactly, and they are trying to buy here based on it. This is broken, and people are looking for buy. Broken, and they are anticipating go higher. But what happening here? Break and failed and pushed downside. But in a reality, why this move happened here? If larger pattern is a bearish, if your large pattern is a bearish, then why are you thinking in a bullish side? You have to think in a bearish side, because bearish is a much high probability compared to the buy, because larger structure is a bearish. And same thing happening in SMC, because everyone have a different way, like own opinion for the buy and sell, right? But people are doing wrong thing this here. Okay. And this is, I'm just showing you, this is why, because the lot of people think that only SMC traders is a real SMC, like only trading, like if you are trading based on order block, post stock, and these things, then you are trading SMC. Actually, SMC is not means only order block. SMC means you are able to identifying the liquidity when people are going to trap. If you are trading based on a chart pattern, candlestick formation, you can also make money as per compared to the SMC, because most of the failures in a SMC reason is a very tight stop loss, and people are coming like motivate to join SMC, and they are like to trade 1:10 and 20 which is a very good. Actually, in SMC concept, you can get very big RR. Okay, but you have no ability to catch them, and in a retail patterns like patterns and charter pattern, and these are things here, you will get a good strike rate also, but risk reward is a very smaller, right? And people don't want like trade a 1:3 and 4 people want to achieve 10 20 which is a like very bad thing. Actually, it's not means that you are trading based on order block, then you can make money. No, if everyone can make money based on order block, then why everyone losing? Most of the traders in SMC concept is a losing, right? So it's all about probability. You have to think in a both side probability, everything. Okay. And even I have seen some people trade based on a single only candlestick based pattern. They are making money, right? It's not about strategy. It's all about psychology and how you are dealing your trades, trade management, risk management. These are main thing. Okay. And you can see here also, these are all pattern is here, right? These are all pattern is here also, right? So you can see so many times patterns also work, right? But when you draw the order block and chalk balls, they work very smoothly, but sometimes they doesn't work, because the market actually want to grab the liquidity. They don't care which strategy you are trading, right? So you have to think in a different way, that when most of the traders looking for the buy and sell. Okay. So this is our move, which taken out the liquidity is here, right? So it means this is our strong order flow is here, because this order flow taken out the liquidity. Trendline liquidity is here and push downside, because break on this one and people are looking here for buy, because they are anticipating trendline broken, and this pattern is a broken, and they are anticipating go higher. But in reality, this is just trap, because think about it. Look at this picture is here. Sorry, this one. Right. This is also a pattern, but in terms of the SMC, this one is also indication for the liquidity graph. But in terms of the structure, this is also indication that market actually looking for the downside, right? It means this is a zone when we can expect market push downside, right? Like this is a like this, and go higher and push downside, because this high act like a liquidity, right? So I hope you understand that what I mean in a higher time frame to lower time frame, and how you can say market Okay. And it's not about strategy. It's all about to see that what people are thinking, right? And the same thing happening here so many times. These things happen here. Like this pattern broken and pushed downside. And this is a, you can see market is a bearish, then why are you buying here? Because this is a trap. Every structure is not work here. People are looking here for buy. They're marking this as a flag and everything. But in reality, this is just trying to grab the liquidity because market taking out the higher time frame liquidity and looking for the downside. So which side is a more high probability compared to the buy sell side? Okay. So if you draw the sell side structure is here like this, trend line broken and push downside. And look at this one. Why this work here? This is a flag. This is a work here. And this is also flag. Why this is not working here? Because broken and push downside. Because market is a bearish. You are playing the wrong side. Means against the, you are not playing the pro trend. Okay. Look at this one. Right. So these are indication people are looking for buy. Okay. So I hope you understand that how you can play and how you can think in both side probability based on SMC, based on the retailer's pattern also, right? Okay, now I'm going to switch in a next pair as a Euro USD. And first of all, check in our daily time frame perspective. Okay, in our daily time frame structure, market was bearish and now trying to go higher. So what happening here and what we can expect in upcoming days in a Euro USD. So this is our previous structure was here. This is our lower lows, lower high, break the structure, push downside, again break the structure, taken out of the inducement, push downside, and finally market break the main high. And this is one, and this one is a called change of factors here. Again, continue going higher high, right? And various inducement market taken out at this point. Why? This is our first pullback is here. So after taking out the inducement, our higher high is confirmed here. So when we can buy here, we can buy on this unmitigated shadow is here. Why I'm not taking this one? You can also take this entire zone is here. For the refinement purpose, I'm taking this one. I'm still bullish until I failed this one. If market failed this one like this, then I'm looking for the sell for the short term to mitigate the extreme, this one, right? And then we can continue go higher. Okay. And if you switch here, let me show you exactly here in a daily time frame perspective based on the candlestick pattern. Market push downside, continue go higher, break this one, high taken out, right? And then this candle act like a POI, which is mitigate here, right? I'm not talking about the candlestick closing or anything. This taken out the liquidity like this. Okay, mitigate here, push downside, break the structure is here. Where is unmitigated? This one. And why this one? Because the previous candle high taken out the liquidity. So that's why this is interesting and this is a PY as per the daily time frame candlestick pattern. Price type here and you can sell here. Okay. Okay. If price type here, you can switch here in a 1 hour, sorry, 15 minute, and then you can sell here. 15 minute PY at least you have to. This one. Okay. So it means this is this was our PY here, and then market mitigate here, and then you can sell here. I think here. And I took also sell entry is here. Okay. If you know, I already posted on Telegram channel, right? So right now, what happening here and what we can expect here? We can expect market are trying to go higher before this drop, and at this point, at least market must be mitigate this one before continue go higher, right? And this is our 15-minute structure is here. Previous high was here, right? Taking out the inducement and mitigate the extreme unmitigated order flow. Which one is here?